their own positioning. So they held on to their belief, didn't they? They held their belief at that stage. And then, of course, the sellers, well, they got very excited about this top edge, didn't they? The sellers didn't stick. The sellers stuck around during that whole phase. They're selling, 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 selling. Market maker buying, 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 buying. And obviously the price rotating, 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 rotating. Now the market makers have got the sellers where they want them. Yeah, in a weak-handed position. So the market makers have the sellers where they want them in the weak-handed short, which obviously is at the top right-hand corner of a balance area. And obviously that means that above this area, there are, what, thousands of stops, hundreds of stops at least, potentially thousands of stop orders in this area here, which obviously is pretty much exactly what happened then when we got that sprint to the upside. So when the market maker pukes when the dealers, or sorry, the traders puke their positions there, the market maker just balances out the books and says that's enough. And obviously that's usually the point where you start seeing the exit price. That's usually the position you start seeing the exit price. And obviously if you got a reversal coming in, you could have taken advantage of potentially a short sell, but you didn't see a reversal. You didn't get that quality of reversal that you'd have looked at and says, wow, that's the deal. We're actually seeing a similar type situation at the top edge of the S&P right now. You see a similar situation taking place at the top side of the S&P just in there. The buyers are pouring in, and at the moment the market makers are absorbing the buying in at those prices at 5.5. Do you see that? They're absorbing those buyers. And obviously the buyers are still coming in bigger and bigger and bigger and bigger. Now the dealers are actually giving a little bit of slack here. The dealers are giving a little bit of slack here to try and see what happens when we go above this area. But obviously the dealers recognizing there's maybe just a little bit too much buying in this area for the time being, and just releasing the pressure a little bit. And obviously when we see that, we're obviously going to watch for that sprinting, which is just done. It's just sprinted through. The dealer's getting behind that sprint. That's why we knew that that was not going to be a sell at that point. Just let it sprint through because they now agree with each other at that stage. You see that? Short term is king. Short term is king. That's why this short term rally gave me all the information I needed to know about this bottom edge, because they held on to, they actually rallied the short term behind that. They didn't fold the short term. So this would have been overweighing the dealers at this stage. So when the dealers came back in here, it was always going to be a buy trade for the squeeze. It doesn't matter what the macro is doing, Everett. You've got to make sure the short-term current candle, like for example, it started to sell in this candle. Do you see the difference? When it sells on this candle and then you get a lean, now you can take a play on that sell. Now you can take a play in the sell because now the dealers are offsetting the buyers that are coming in. The dealers are offsetting the buyers that are coming in. And it just makes life a little bit easier for you on the short side. So you've always got to try and make sure you don't lose sight of the fact that it's all about, for these types of trades, it's all about the offset. If there's too much buying coming in and the market makers aren't really ramping up, really ramping up at the top edges or the bottom edges, whatever side you want to be on, it's not going to be a trade. You simply let it press through. Okay, so we have to see the opposite. We have to see the opposite. Into this balance area here, we got exactly the opposite, didn't we? We got exactly the opposite. And that's what you're looking for. A clear opposite type trade. If you don't get the opposite, it's not a trade yet. So an example of that would have been on oil. Let me show you what I mean. It's just the last trade on oil, which is another buy trade, but I'll show you what an opposite means. Okay, so the buy trade in oil, sorry, I've put a line across it, but it doesn't make any difference. So we're seeing some selling coming in here, right? We're seeing some selling coming in. Well, when that's balancing, I am not going to try and lean against that selling. Make sense? I'm not going to try and lean against that selling. So when that is simply balancing, I am not going to try and do any business against that amount of selling coming in. So from a locals point of view, you leave this area well alone. But when you start seeing the buying getting refreshed behind it, which happens here, you see the difference? From that point onwards, you see the difference? So the buying is now getting refreshed behind that. See the difference, guys? So what we see in the buying getting refreshed behind that, we're starting to recognize now is the time we can buy against that selling. Now is the time to buy against the selling, not during this phase, because we've got an offset here. That's why we're thinking about changing this to a single line, so that you don't have to think about whether you're getting enough of an offset. So what I was having a conversation with Greg about was, can we convert this into basically a single point so that we know how much push and pull we're getting in the marketplace? So what I suggested to Greg was, and this is obviously the next development that we're talking about in terms of getting it into Sierra Charts and into NinjaTrader, is remember the conversation we had about the market makers, about how to draw a candlestick. So for example, if I've got a candlestick that looks like this, little spinner candle, and let's assume we get a lot of bids coming in. So to the right-hand side of that candlestick, if we get a lot of bids coming in, so in other words, the yellow line is going straight up, right? So if we get a lot of bids coming in on the right-hand side here, what I'm thinking of doing is that on the right-hand side, before the next candle paints, is we'll paint the candle for you, before the candle paints. So if we get a lot of bids coming in, we'll have a line, for example, here. Whilst this candle's forming, we'll have a line here. And if we see that the amount of delta that's coming in is getting thinner and thinner and starting to catch a bid, what we'll have at that stage is we'll have an offer, and the offer might be here. So what it's going to start showing you is what's going to happen in the next candle in terms of the way that this is developing as a storyline. Would that be useful? So that effectively you can see what the next candle looks like before the next candle takes place. I don't know if that would be useful or not. Perhaps you can let us know, but that's certainly what we would be trying to just come up with. It is, what is the next candle going to look like based on the order flow at this present moment? And obviously if that's what the candle looks like, then obviously as the next candle opens, and if the next candle opens, for example, this is going to be updating, of course, in real time. If this candle if this candle ever trades into the blue area, then what will happen is it'll give you an opportunity to start bidding into the blue area, right? So you'll be able to start bidding into the blue area. And as the candle develops and it starts to hopefully, it starts to move up, and it starts to move up inside that one candle. As it moves up inside that one candle, what's going to happen is, in real time, the red line's going to move away if everything is still bullish. Yep, the red line is going to move away if everything is still bullish. And the blue line will basically keep following up behind the trade and possibly starting to jam into the trade itself. And obviously when we start to recognize that evolving, what we're thinking is that we could still see that happening there. And if it ever reaches the red line, so let's assume for whatever argument we start reaching the red line itself, then of course that would be an opportunity for you to take a proactive profit. A proactive profit at that stage. No, this is a forecast of what's going to happen, Sebastian. It's not the actual liquidity itself. It's a forecast of what's going to happen. I mean, if it was just liquidity, then there's no point in us developing it, because all we would do is just use the liquidity order book from Sierra Charts, NinjaTrader, and Bookmap, because that's all you would be seeing, is that pooling of liquidity. But what we're trying to do is a single line based on the actual trade plus the liquidity. So we're adding the actual trade into this as a storyline. So that would be your trade there, for example. So you'd see that narrative evolving at that stage. But so Greg's going to be taking a look at it, I'm sure, and that's the basic thought process behind the trade.